How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on Euro versus US dollar, EU. I do apologize in the background. You might hear a lot of leaf blowers. It's that season here in New York. It's the first day of spring. We're going into summer soon. So a lot of the landscapers and neighbors are getting their lawns taken care of, maintenance around their house. So I do apologize. The next couple of months here, you might hear a lot of background noise. I'll try my best to move into a different room or try to record during a different time, but this is generally the time I like to record the daily updates in the AM session before I get out to head out to the farm. So yesterday in the later PM session, we saw that the Feds had their conference and they had their rate decision. They did not cut their rates and they remain the same. And that sent a lot of the markets flying or selling off. So you saw dollar shoot down really fast. And you saw like EU, GU, NU, EU shoot up and break either a swing high or previous daily highs. Now, in this stance of what we're looking at for EU specifically, we see price break a swing high. We trade right back up into what? A PD array or a bearish order block theory. And then we see a huge sell-off today. Now, we know we like to sell after up close days in a bearish trend. However, many people may say, well, Deontay, I thought breaking a swing high represents bullish momentum and the market's going to go bullish. That's not necessarily the case. This is where trading IQ comes into play and having knowledge and experience comes into play. We know that there's something called false breaks, false raids, getting retail traders on the wrong side. In my opinion, I am looking at this as a false raid. I truly do believe that the market is most likely going to continue to sell off and target this swing low here. I want to see price continue to go lower. If not, price is going to probably try and trend higher. That's the only stance. Like I said, it's only two things that is occurring. Either this is bullish momentum coming into play, or this is a false break. Let's write that down so we know. So do we have a false break? Or is this now bullish momentum? That's what we have in our hand right now, based on what we're seeing here. You can see the idea, though, the theory of selling after the up close day did play well today. So if you look at this intraday, you're going to see there's a London model, simplistic idea that I like to teach others playing out today. So let's go down to the 15-minute time frame. Let's bring it back right before London. See that's price getting above that PD array for a second, probably tagging into those daily order blocks, old highs. And we can see we have the Asian session consolidating. We like that. All markets starting a consolidation. Very obvious thing that the market is going to start gearing into what? A large range cycle. This is a small range cycle. You can tell. Just look at the candles and look at how the session formed. It's a small range session. That means either London or New York is going to be very dynamic. We even had news during the session. So we know that this is going to be very volatile. We have the 15-minute time frame here. We have the Asian session high. We can note that off. But generally, when we're looking for the London model, we're looking at midnight to 2 a.m. And we're looking for all the swing highs and swing lows that are unbroken. This is a swing high that's broken going into the London kill zone. So going into the London kill zone, we can see a 15-minute swing high has been rated. At this point, I'm going to stalk a setup to go short because we're overbought. We're above 2 a.m.'s opening price, and we can see we're pushing above midnight's opening price. Right there. So that's midnight opening price. Like I said, I apologize for the noise in the background for those that might be irritated. Please bear with me. Midnight opening price. London opening price. Think about all the theories I show you guys. The same ideas. This is 2 a.m. So this is London's opening price. That's 12 a.m. midnight opening price. That's the Asian high right there. Let's play it forward. Price runs up. But in the meantime, while price is going up, what are we looking for? So as soon as price broke this high here, we're stalking a setup to go short on the lower time frame. We're trying to lower or reduce the risk by taking an entry on a lower time frame. We're looking for a fair value gap. And we'll take this off now. We're looking for a fair value gap that breaks a swing low, and the swing low is inside the fair value gap. So this is 2 a.m. right here. And this is midnight. We got the framework, right? We have some liquidity pools available to us. We also have the Asian session low, right? We have the Asian session low down here. So we have another draw, right? A short-term draw on liquidity pool. Asian session low down here. Remember, this is the Asian lunch session, midnight to 2 a.m. Just to give the context here. Now let's pay attention. Do we get any fair value gap that breaks a swing low? There, right there. 1, 2, 3. Where is this swing low occurring? Right? This fair value gap and swing low occurring above in a premium. Think about the idea. The entry technique is happening in a overbought condition. That's a very crucial thing. A lot of people overlook it. A lot of people ask me questions. Why did you not take this fair value gap? Or why did you avoid all these other fair value gaps? Because it's not in a certain sequence and it's not in a certain area. If I'm looking for a short, why would I short below 2 a.m.? That's kind of ludicrous, isn't it? It's counterproductive towards me as the retail trader to sell at a lower price. I want to sell at the highest price possible. I'm not the commercial speculators. I don't have deep pockets to hold a deficit. There's going to be a margin call or there's going to be some type of leverage that I can only utilize. I want to maximize that as much as possible and take as less risk as possible. So that's the entry. I'm trying to go short here. 15 pips. It's the same thing I've been showing for the last couple of years, honestly. Same thing, same idea. I've showed this London model so many times. I know I don't have an official video showing what the model is, but I show it so much that you guys should know it. That a baby can comprehend this. So there, we're in short and we hold. Yes, price pulls up. We're in some drawdown. But that's the whole point of risking properly. That's the whole point of comprehending how much I should be risking per my equity. And there we go. Price sells all the way down into the news. Taking out what? The Asian session low. We run up, get traders long, and then we go short. Not all the time will you get that entry technique where it's perfect. It hits the fair value gap or it hits your entry point or point of reference or interest and it sells off. It happens. The market's not, you're not always going to get that perfect opportunity. And I know there's some people that are freaks of nature, they want to be getting the best entry possible. They want to get this. Not everybody's going to get a chance to see that depending on your lens and how you're viewing it. But we see it from this perspective. And we rather take this because it's still a quality trade. Think about it. It's still a quality sell opportunity because we're selling above 2 a.m. and we're selling above midnight opening price. Still a decent quality sell setup. Yes, price runs the Asian high, and then there goes the short opportunity. So it all depends on what you're looking for specifically. This is what I look for specifically, so that's what I show you. You may want to wait for the Asian session high to run first, to be purged, and then you would look for a short opportunity. You could look at it that way, but I'm looking at it from this perspective. This is the time period that frames my liquidity pool to go short or go long. If it breaks the Asian session low or the Asian session lunch low, that's a purge on sell side. Maybe I'm looking for a long opportunity, but does the higher time frame trend recommend or suggest that price is going to go higher? Maybe not. So maybe I don't take the long. Remember, you have the choice to do whatever you want in this market. You don't have to go long just because you see buy sell side rated. You don't have to. You could wait on the sidelines. Maybe you want to see buy side rated first and then it sells off. Or maybe you want to see sell side rated, then buy side rated, and then a short. Remember, there's so many different ways the market can form, but it only takes experience to comprehend some of these things. Some people don't have it yet because they don't have the experience yet. But I'm trying to show you that with the day-to-day activities here, the day-to-day updates. Let's play it forward just to see what happens to rest of price. Man, what a seller, right? And let's speed it up because I want to get going. Look at that, man. And this is where we are right now in the New York session, up to date. This is where we are right now in price. New York session sells off too. And we can see the New York session gives a little small sweep up and then it drops. So if you were to look at that here on a lower time frame, let's just go to the 5 minute. Hardly even moves above the open here. You see? So you're not always going to get that classic Judas swing for every single kill zone. Every day is a little different, but there are certain standard procedures that you would want to follow. You would like to see price run above the New York Open and then sell off. Notice this harsh retracement too during this dead zone, the London lunch. This is one of the characteristics here. Hard retracement. A lot of people would miss this move here. And I'm talking from experience. A lot of people would miss this opportunity here and then try to look to go short here. But instead, the market pulls back, completely knocks them out the market, or causes them to go long. So it's a difficult thing. But if you just take your time day to day, don't rush these examples, back test, demo trade. A lot of people don't demo trade. Have you demo trade for at least 6 months? Have you seen 6 months out of the year without live trading? No? Then go back and demo trade a bit. If you could demo trade for an entire year so you can understand how a yearly candle works, a month to month candle works, a day to day candle works, a week to week candle works, you would gain a lot more insight before live trading. Live trading is a whole nother beast. Hopefully, you find this insightful. Peace.